Hey guys, Youthful Yields here. I just wanted to go into kind of what leverage funds are and display kind of the pros and cons to using leverage funds. So, firstly, if you visit really any of these pages on any leverage funds page on Robinhood, they usually have a pop-up that says, hey, you're about to trade a leverage fund, and they also have this page that kind of displays what a leverage fund is, what a leverage fund is, but put simply, they're basically a multiplier on your returns, whether that's positive like it displays here or negative right now. There's two main types of leverage funds. There's 2x funds and 3x funds, as it displays here. Now, it's something worth noting is any fund that's going to be coming out now is going to be 2x, 3x. There's like a cap. So any new fund's going to be 2x. So in my last video, I kind of went over one of the funds that I'm looking at, which is USD, which basically is a semiconductor leverage fund. So this is a 2x fund, and most of these are up here as well. But I wanted to display kind of why leverage funds are a good idea and a good investment, or how they can be and how they can't be, right? So a few examples of companies that have ETFs for these leverage funds are ProShares, we have Granite Shares, Direction, and Microsectors. Now these are like pretty well-known ones. One of the most popular this year is definitely Granite Shares, and that's because Granite Shares kind of popularized single stock leverage funds, right? Where with other ones, I mean, these are ETFs where it basically takes a grouping of stocks and or indexes and uses that to somewhat diversify. But with Granite Shares, you kind of get all the upside of the underlying stock. So we can see here, if we go to year to date, 232%. If we go to year, 234%. Now, we also can see some other ones. This is a 3x fund here, where we can see the year to date is 48%, year and 5 years. So it really just varies. Like I showed in my last video as well. This one's a good one too. This is a 3x fund. But let's look into kind of the returns, the possible returns that we have. So I have 2 pages and 2 examples. So one is NVIDIA versus NVDL. So NVIDIA is obviously on a crazy bull run right now. Definitely this last year has been insane for NVIDIA. NVDL is that Granite Shares, a leverage fund version of it. And what's important also is this is a daily leverage fund, not like a monthly leverage fund, meaning every day you get that 2x return and not just by the end of the month. Now that could also be minus 2x. So again, keep that in mind. Your gains are going to be higher, but your losses are also going to be lower. So it goes both ways. But let's look at this real quick. So this site's kind of interesting and pretty useful, but essentially if we put $10,000 in at the beginning of this year, guys, the beginning of this year, you can see NVIDIA with, their dividend reinvestment, not that you get really any dividends here, but everything involved, you get $22,000 back. If you were to sell right now, obviously, if you were to sell about, a month ago, and let's take a look at that actually in a second, because I want to show, the other side of things with the leverage fund, NVDL, we have 34,000. So we are literally beating NVIDIA. And again, that's all thanks to leverage. Now, it's not sunshine and rainbows with leverage funds. If we take a look at Tesla, which Tesla has had a pretty crazy year on the opposite side of things, we can see here, if we were to just put our money in Tesla, we would actually have about $8,360 left. But on TSLL, which is a, let me see, let me show you guys TSLL. This is their 2X, Directions 2X ETF. We can see here that we only have $6,661 left in our account. So both are negative, but you get more of that downside with like your downsides are gonna hit, right? Again, it's works in both directions, up and down. Now let's take a look back at that Nvidia stock, maybe before this crash took place, so maybe the end of June. So let's see, maybe the 30th of June. You can see, look at this. It's pretty crazy, right? We have 25,000 on Nvidia, where we have 48,500 on NVDL. So again, your mileage is going to vary. Be careful on which leverage fund you decide to put your money into, because as you can see between Nvidia and Tesla, these leverage funds can do some serious work for your portfolio, or some serious damage to it. So you just got to be very careful on where you put your money. So obviously that's kind of the entire stock market. That's just how it works. But stuff, just always take a look at the history. Now, I know past history does not always indicate future history, but it's not to say it doesn't have a part in future history, right? So always take a look at some previous history of the stock and then ongoing stuff. Like we can see here, why is Nvidia stumbling and whatnot. So just be very careful when you mess around with leverage funds. I myself am trying to take part in this leverage fund here, this USD that I showed off in my other video, where in the last year they have 132% increase, and 5 years they have 725% increase. And this is because it's a leverage fund, right? It's a leverage fund on a lot of these semiconductor companies, which, newsflash, that is what's making money this year, right? Nvidia included. So, and you can see that in their holdings. I'm not sure if Robinhood has it on this page, but you can see that in their holdings. They have a lot of semiconductor companies. I mean, that's, well, obviously, but a lot of their weight is Nvidia. In Nvidia, that's not going to be a lie, right? So obviously with leverage funds, or really any leverage ETFs, if you're going for the diversified route, you should really look at the holdings, the underlying holdings. If we take a look at Yahoo Finance real quick. Right. For USD, you got to be really careful, right? Because on their holdings, excuse me, they have 32% allocated to Nvidia. So, that might be way too much for some person. And honestly, personally, I think that might be a little bit too much. Yes. 32%, because Nvidia's been on a crazy bull run, and they're obviously falling right now, so we're kind of feeling that, right? And if I go to this last week, 15%, this last month 28%, right? But as I went through my in my other video, I personally think this is the time to buy, people. I mean, if you look in the last year, this is a crazy dip. This is a great opportunity for many funds. It's not just, semiconductor funds, but a lot of the NASDAQ, a lot of tech-heavy stocks. You're talking Facebook, Microsoft, Tesla. I mean, I try to stay away from Tesla personally, but all of these stocks are on the dip right now, and, buy the dip. Of course, this is not financial advice. I'm not a financial advisor, but I just wanted to put my 2 cents in and kind of display the possibility that you can get and the possible returns you can get with dividends, and leverage dividends, and why they might have a spot on your portfolio. Yep, that's it from me. I wish you guys a wealthy future, and take care.